Lisa, does Greg or I?
I'm sorry, yeah.
All right, it's 6:03. We'll call the meeting to order. Turn it over to you, Greg, for roll call.
All right, Canfield,
Here.
Beecham,
Here.
Caldwalder is absent. Chauvin,
Here.
Spicer.
Here.
I would make a motion to approve the absence of Tina Cadwalder.
Second.
We have a motion and support. All those in favor signify by saying aye.
Aye.
Motion carries. Brings us to approval of the agenda.
We do have one, Greg might have more, but we do have one change in that we need to, under item 3, whether you want it 3A, we need to approve the minutes from the August 13th closed session, which was discussing the evaluation of the general manager.
All right. With that change, I entertain a motion to approve.
So moved.
So, support.
Okay, we have a motion and support. All those in favor signify by saying aye.
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 Motion carries. Brings us to item 3, approval of the regular board minutes from September 10th.
I wasn't here, so I'm just going to abstain because I don't know.
All right.
I move to accept the minutes.
And I'll support.
We have a motion and support. All those in favor signify by saying aye. Aye.
And one abstain.
All right, let the record show that. We also have the closed session minutes from August 13th.
I would make a motion to approve the minutes of August 13th. I was there for that.
All right,
And I'll support.
we have a motion and support. All those in favor signify by saying aye.
Aye.
Opposed?
I should abstain because I wasn't at that meeting.
All right, we'll let the record show that. And that wraps up 3, brings us to item 4, public comment for items not on the agenda. Hearing no comment, we'll move on to the action items. And Greg, I'll turn that over to you.
All right, we've got a number of things to look at this evening. First thing up, we'll look at the audit. Peter's here this evening, and I think he has some words for us regarding our audit.
Great. I'm really here to answer any questions you may have, and I typically walk through some graphs which I brought along again and just show some history. There are some highlights I'd like to point out in the audit, if I may, and at any time I'd be happy to try and answer any questions you may have, and that's really the point of me being here. And with that being said, I would say you've received your audit reports. Our opinion on audits is as of September 15th, 2015, and our opinion is on page 1 of the audit document itself, and it is once again what I would refer to as a clean opinion that the financial statements present fairly in all material respects, financial position, results of operations, and the cash flows, the low light and power, in accordance with generally accepted accounting principles for the year ended June 30th, 2015. And that is the page 1, second from last paragraph, and I'm summarizing it, but there's a lot more information here. It talks about the financial statements, the fact that they're the responsibility of management, and it's our responsibility to express an opinion on those financial statements. So that's the highest opinion you can receive. We completed our audit field work, I think it was somewhere around the first week in September. It might have actually been right at the close of August. So I believe it would be nearly as early as you've seen that in the recent history, which is very positive. From our perspective, when we came in, Steve and his staff and Greg, they had everything that we requested in advance, and we came out in advance and looked at inventory and things of that nature. They had everything prepared, schedules, all the numbers, and basically we came in and audited. We didn't perform accounting services like we might at many locations, so that's positive as well. From our perspective, it's a true audit rather than doing accounting services and performing an audit, and we can't do too much accounting and actually audit and be independent. But from our perspective, very clean audit. But I do want to point out a couple things that are identified within the report, just to bring those to your attention. So if you have the document with you, I'd like you to return with me, if you might, to page 3. And this is the first page of the management's discussion and analysis, and talks about what happened during the year. How did you end up the year? What were the significant financial highlights? And where I really wanted to turn is the next page, which is page 4, and take a very summarized look at where did you end up 2015 versus 2014. And I wanted to point out a couple items here. You will see in that summary there is something referred to following total assets. This item is referred to as a deferred outflow, and that is the result of implementing a new accounting standard that's required for governments related to your pension, and I'll get into that in a little bit more detail. Also, I wanted to point out the fact that your total liabilities, you might see, have actually increased this year, and the long-term component increased substantially, even though you paid down $220,000 worth of long-term debt. And that substantial increase is the result of that pension standard that was implemented as well, and we'll talk about that in a little bit more detail in just a moment. Then the last 4 components on that schedule, you'll note that your net investment in capital assets went up this year by approximately $600,000. That's the result of purchasing additional or improving the facilities where you have the biodigester, net of depreciation, but also the fact that this number represents your capital investment less debt. As you're paying down that debt, this number is going up, but depreciation's forcing it down. Somehow, over time, you're managing to continue to invest more assets in your system and in your infrastructure. The next component is restricted net position, and that just relates to bond covenant requirements, typically of the dollars that have to be set aside for future debt service payments. Then you can take a look and you'll see that your unrestricted net position decreased. And that is primarily the result of implementing this new accounting standard. This new accounting standard, I will provide you with a little bit additional detail in just a moment. So there's a very, very summarized look at your net position or balance sheet at the end of the year. If you turn to the next page, we see a very summarized picture of your change in that position, or similar to an income statement for a business. And what we will see is that in 2015, your operating income went up approximately $1 million. That was a result of reduced cost primarily, but also increased sales. So kind of a contrary thing that you might not expect to see, but I would suspect every business would like to see that occur, additional sales and lower costs. That's primarily the result of the cost of power. And as we work our way down the page, you'll notice I'm going nearly to the bottom. You can see there is a change in that position, and for the current year, 2015, an increase in that position of $1 million. Prior year, that was $78,000. And I'm going to leave it at that for the income statement and the balance sheet, and then talk a little bit about why do we see this big change in your ending net position from year to year? And again, it's the result of implementing that new pension standard, and I'm going to show you some detail on that, if I may. If you turn with me to page 17, I just wanted to point out where did that addition in net position come from, or the fixed assets come from, and this just gives you a picture of to what extent did you invest in additional capital assets, approximately $800,000, net of depreciation of approximately $530,000. If you turn with me to page 22 of the report, at the top of the page, this is a picture of the city's entire pension plan. Light and Power is not separately broken out as their own net pension liability and their own fiduciary net position, but during the current year, all governments with a June 30 year end were required to implement a new pension standard that requires entities, governmental entities, to record a liability to the extent their pension plan is not funded. So for the entire city, on the far right of the top table, near the bottom, you will see that there is a number, $3,680,000. That is the extent of the underfundedness of the city's pension. Your portion of that total is $1.3 million. That $1.3 million went directly to your bottom line at the beginning of 2015. That's why you see that change in that position from a million plus to a lower amount, while you still had positive income. So you will only see that one time. Now going forward, as that plan gets funded or underfunded, you will, the effect of that will be driven right to your income statement as an expense, a pension expense. So hopefully I've done an adequate job of explaining that, but it's quite a complicated transaction. Steve took it on, received the information from the Michigan Employee Retirement System, made all the necessary calculations. And we talked about this before we even did the audit, so it was quite positive. He shared the information with the city and made their calculation as well, for to what extent are we recording the liability, to what extent is the city recording their share of the liability. And the calculation at the top of this page is actually something you have to accumulate the data from MERS to come up with. The long and the short of it is your bottom line got hit by about approximately $1.3 million as of the beginning of this year. Going forward, any change as far as market value of the investments to support your pension will drive additional pension expense or lower pension expense. If we have a phenomenal year, you'll have years where your pension expense will go negative. It's just the nature of this accounting standard. It's saying, to the extent you have a liability, offset that with the value of the investments, which has not been done in the past, but the actuarial value of the investments were considered. Now we're saying the market value of those investments. They go up, your expense will go down, and if they go down, your expense goes up. I'm going to ask you to turn with me.
I had one question,
Yes,
if you don't
sure.
mind. Now that we've taken this $1 million hit this year,
Yes.
next year, it should be a much smaller number.
Right. Next year, you will not actually take any effect on your bottom line, or directly to your bottom line. It'll flow through the income statement, and it should be, I would suspect that it'll be very minimal.
Right.
It would only be large to the extent that you change your benefit plan, and let's say you make the benefits better. That, the effect of that gets amortized over the remaining service life of the employees in the plan. So that hit would be somewhat substantial. Also, to the extent that your investments do not return what is expected or return more than what is expected, and that's 8.25%, that will affect your income statement, and that gets amortized over a 5-year period. So it's quite a complicated standard, and after implementing it, I think they've somewhat overdone it here, but it is what it is, and we're following the rules. But we'll probably keep this as a talking point for a couple of years so that we see what is this actually doing. Until we actually experience it for a few years, then we'll have a better understanding of how
Pretty much over now. for
Yes.
us.
The big hit is over. Now we'll just see the fluctuations in that market value for the most part.
Thank you.
But when you say big hit,
Yes.
Low Light and Power hasn't done anything different. It's a different accounting, correct? I mean, it's a requirement that the government has said you must do.
Yes, this
And
is.
so it's not like all of a sudden we were careless and lost $1 million.
No, exactly. That's a great point. This is something that every government is experiencing with a 6/30 year end and 12/30 year ends are coming up, that everyone will be implementing this. The extent that your plan is underfunded is not unusual at all. I have some clients that have 50% funding of their pension plans, which really hit the bottom line and will really affect compliance with bond covenants, where yours, it's, I believe it's about 70% funded, and it's not quite so substantial. It's nothing, this is the result of investments not performing, because theoretically your plan should be funded as you're paying in what they say, and it's also the result of change in benefits. So if there were changes in benefits in the past, those get amortized over time. You don't take the hit immediately as far as contributing additional dollars. And so it's merely the difference between what's owed and what you have in the bank, or what you have with the Michigan Employee Retirement System. But everyone is experiencing this. I have one out of, I would guess, probably 25, 30, 6/30 year ends that actually had a positive balance that impacted them positively. Otherwise, everyone was underfunded, and they're all pretty much everybody is in the Michigan Employee Retirement System. It's just where the plan is at this point. And the schools will be substantially, their number is much more substantial, to the tune of tens of millions of dollars for school districts, if not even more. So comparatively, you did well.
Thank you.
I also wanted to point out, just if someone was to ask the question, you could point them to page 25, and it talks just at the bottom briefly to what extent were the beginning numbers for 15 adjusted, and it's the result of implementing these new standards, GASB Statement 68 and 71, which are both related to accounting for pension plans. Coming down the road, just to throw this out there, and you'll see this comment in future audit reports, this same concept is coming to other post-employment benefit plans, healthcare coverage after retirement. And that to the extent those plans are not funded, the entire liability will go on the books. To date, you've been accumulating a small portion of the total. In, I believe it's 2008, you will pick up the entire balance for that. But it would not be as substantial, I don't believe, as this number. In addition to the financial statements, we've looked at some of the notes to the financial statements, and I didn't take you to the detailed statements, but I'd be glad to talk about them. I think a lot of the pictures do that. But we also have a letter that we provide that it talks about our responsibilities and your responsibilities, difficulties we had performing the audit. We had none. The audit went very smoothly from our perspective. But I would suggest to you to take a read through that document as well, and I'd be glad to to talk about any of the comments that we have within this as well. We identified two opportunities for improving your processes. I don't think they're really substantial, but we like to bring, those types of opportunities to you.
So you like to find them?
Yes. It's our mission to find them.
No auditor feels complete unless they find something.
Right. And we just thought these were two opportunities where you could improve your processes. And with that being said, would you like to look at some historical information, or are you happy with where I'm at? I like the history myself.
Yeah, I'd like to see it.
So this picture is just to what extent are operating revenues, so the costs of operations greater than the cost of operating, including your payment in lieu of tax to the city. So you can see this is the biggest net income you have had in the past however many years. It looks like it's about 8. So very positive. And that's kind of the unique electrical market that's out there right now, is the fact that you can buy power relatively cheaply, where we saw great increases in the past number of years. Right now gas is driving the cost decline, I think. I was just working with a coal electric utility with a coal plant, and they can buy power cheaper than they can run their plant, just because of the cost of energy and that electrical cost. But there's a number of things in here. The fact that you locked in on costs in the winter, that was very substantial, reducing your costs this year. And here's just a picture of where did the dollars go to that were collected during the year, and you can see it's primarily purchase power. This graph did not change substantially from the year before. And this next picture just gives you an idea of that graph over time. Where are the dollars going? And as you can see, you sold more electricity, yet your actual electricity costs went down. So that's a big driver in that cost perspective. And the other costs, there's really nothing that sticks out as going way up or way down. It's that big number makes a big difference. Here's the purchase power across those investments that you've made, like Campbell, Bell River, the Traverse City or Calcasta turbine, and to what extent, where are you getting your power from? And as you can see, other power is becoming a bigger percentage of the total. To some extent, that's driven by required renewables. And then here is the perspective of that bottom line. What happened over the past 7 years? And you can see best year in 7 years. I suspected maybe ever. I don't know. I didn't go back any farther. But again, the drivers were, you sold more, so which was able to spread that overhead over even more sales. And then you were able to purchase at a lower cost, and you're doing some unique things that are, such as the project you have at your facility, the biodigester, or, you know, purchasing some of the renewables, and those things are kind of new to you. I mean, I understand they've been going on for a few years, but really kind of becoming a bigger percentage of what you're doing. That's what I have for you. I'd be glad to answer any questions. Again, I would say that the audit went very, very well from my perspective. We did it rapidly. We were here for a week, and we did, I think, a day of planning with 2 people before that week. And we had a draft to your staff. They were able to review it rapidly. Went great. But that's from my perspective. They might have a totally different perspective.
Here's a slave driver.
I'm sorry. And your staff is very cooperative. It's a good engagement from my perspective. It's fun. It's nice people to deal with.
So why does it go so smoothly?
I think from my perspective, is your people are prepared. You have your accounting done. Things are done timely throughout the year, so it's not a stress when you have to compile everything at the end of the year. I think that's a lot of it. We look at controls during the year, so we can see whether, you know, our bank rec's getting done. And that's the first indicator, that if they aren't, you have a problem. But if you're doing bank reconciliations and actually analyzing and finding issues before you get to the end of the year, it makes a world of difference. But Steve could probably tell you how was he able to put all that stuff together sooner than maybe had happened in the past. So he probably has maybe a better perspective.
We have a great staff. Pretty much. We work hard.
No, you guys do a great job. We're in good hands
Thank you.
here.
Any other
you.
questions?
So you need a motion to accept this? I would make a motion to accept the financial audit for the year ending of June 30th, 2015.
I'll
I'll
support.
support.
We have a motion and support. If there's no further discussion, all those in favor signify by saying aye.
Aye.
Opposed? Motion carries.
Thanks, Peter.
Thank you.
Thank you,
Thank you.
Peter.
Thank you.
Thank you.
I'm going to switch to item C now. We have another guest tonight, Nick, and I'm sorry, I don't know your last name.
Bradis.
From GRP. We have on the agenda tonight the low light power SCADA system. And so I had Nick come just in case you had questions that neither Tom or I could answer. But we talked about this when we did our capital budget planning. We talked about the SCADA system. We talked about it's a mechanism for us to be able to monitor what's going on at our substation. That's the first step in us being able to monitor the system, our distribution system as a whole. And this is the first step in a SCADA system that will combine with other things in the future to help us do that. The main purpose that we want to do it is because it helps increase the reliability of our system. And as we get farther steps down the road, whether it's the AMI system or an outage management system or a demand side management system, all of those things we'll partner with and key off of this SCADA system. So we had put in the budget, I think we got a number from Michael McGeehan and Rob when they first started talking to us about this SCADA system. We had a ballpark number of about 50,000. That's what we put in our capital plan. The numbers that came in from GRP in terms of the software and the installation, and we need to have a server for this and that type of thing, came in at $37,872. So
I'm assuming the surveillance software is $12,309?
yes. Oh, an extra 3 in there,
Yeah.
yes.
Just wanted to clarify.
Yep, no problem.
If we have our own server here, what are we doing to back up and protect the server? Are things backed up off-site if this is all on a server, or?
Well, for this particular server, I'm not sure what Betsy has designed.
Okay,
It is separate from our main system, so
okay.
I'm confident that it'll be backed up, but I'm not sure what her plan was at this time.
Okay.
Right now, we do do a backup weekly, and we actually take the hard drive and put it in a
Oh,
fireproof
so you're
safe.
doing that.
So we
Okay.
do rotate it. And Betsy just installed a new Untangle
Mhm.
program for like firewall and
Yep.
virus protection and malware and spyware and all that type of stuff. So we have taken cybersecurity pretty seriously in the last 6 to 12 months, just with making sure we're up to par, especially being a small electric utility.
I think I'd mentioned to you before in a previous board meeting that there have been a couple of municipal utilities that have been infiltrated. And so one of the things that we've done over the last 6 months is we had a number of meetings with Betsy and then another company called High Core Tech, which gets more into the security side and the servers and the routers and those things that we use to come up with a system that would keep us more secure. And one of the things that was most amazing to me was the small utility that got infiltrated out in Nebraska. Once they got a system set up and were actually looking at what was going on, they were averaging about 30,000 hits a week of people trying to get into their system that they didn't know who it was. I mean, some of them are probably legitimate, but a lot of those aren't. And so there's a lot of perception out there right now that potentially hackers could be trying to get into the grid through smaller systems. So we've taken steps to try and get ours advanced to the point where we're not going to be as big a target as we might have been before. So
just to clarify, the 37,872, I'm looking at these different numbers. I'm assuming this does not include the new server? You said that's already been done?
no, there's a
Unless it's the substation equipment, but that seemed low to me to install on the server.
I think that,
It was $1,000,
That's the
I believe,
PC.
to get a new PC.
okay.
Yeah, that's in there, the PC.
The PC's, okay.
Oh, but see,
I thought he said a
PC
new server.
Well, that's the
Okay.
PC, I'm sorry,
Okay.
to
Okay.
operate the system.
All right, all
That's the system cost.
right. I was thinking a server, sorry.
Okay, no, that's my fault. I
Okay.
used that word.
Yeah, all right.
Okay. So no, this is all inclusive and will get us up and running. Again, it's basically a reliability thing. It will give us things like circuit load reports. We'll be looking at each of the 6 circuits that we have coming out of that substation. We'll be looking at loads on each of those circuits. So give us some operating reports. It might give us an alarm. If power goes down on the transmission coming into our system. Ultimately, we'll be connected to the AMI and an outage management system, and then ultimately at the end, maybe a demand-side management system, like what they call a DSM. So it's going to give us basic information to allow us to watch what's going on at the substation. So that's like the first step. Any questions, anybody has? I know when we talked about it before, we had questions, and so. No?
No,
Well, the SCADA, the acronym for that, is the acronym for Supervisory Control and Data Acquisition. So that's what we're looking to do, is to get up-to-the-minute reports of what's going on at the substation, whereas now I have no idea of what's going on unless I walked out there and took a reading on there. I could punch it up on the computer and see what my megawatt load is on each circuit. I could see what the amps are per phase, the power factor. The system will go ahead and tell me if a breaker trips, and it would send out a text or an email to our linemen and say, hey, this is what happened on the substation. Whereas now we don't know unless we get a call from a customer that says, I'm out of power. The lineman will actually probably get notified before a customer could contact them.
So this is, I take it, this is in complement to the smart meter program that's, that going forward, that this isn't going to be overlapping capability with, because we talked before
No,
about the
it's not.
smart meters kind of being a diagnostic tool as well in terms of looking at where issues may be occurring, and
Right, but those are
but those are all just at the consumer side.
at the
and
consumer
this
level. This is.
the SCADA is part of the main infrastructure.
Right.
That's my understanding.
Yes,
Okay.
yeah. They will complement each other ultimately, but this is the first piece to give us that diagnostic capability on what's happening at the substation.
This
Okay.
will really help in like long-term planning eventually.
Long-term planning as
More of a
well.
macro type of view
Mhm.
where AMI
That's
is
one
like
of
a
the-
micro view of the individual consumer. This is
Mhm.
like major circuits or lines.
One of the things that GRP does for us is the modeling. We talked about the windmill modeling that they do that tells us, where we might have a need to do work on the system because how our system is changing, or we add new customers and the load changes on one circuit or another. Being able to monitor all those things that go on at the substation helps in that modeling process, right, Nick?
Yep,
Okay.
absolutely.
Hey, I'm doing all the talking, he's the expert.
No, I think it's a great thing. I think as a board, again, I'm going to toot our horn a little bit. I think we have looked to the future of low light and power, and these are the things that need to be done, need to be purchased, need to be implemented so that the future of low light and power is viable. And with that, I would make a motion to make the purchase of the SCADA system of $37,872.
I'll support.
We have a motion and support. If there's no further discussion, all those in favor signify by saying aye.
Aye.
Opposed? Motion carries. Thank you.
sir. Thanks.
Oh, you're not gonna stay for that? So you're going back to Boeing?
No, I have to be in Portland in the morning. I'm going there next.
Thanks,
All right,
Nick.
thanks,
Thanks,
guys.
Nick.
Nice little inn
attending.
right on Main Street. You could have spent the night here.
I may still.
Go check, see if they have a room. It's very nice.
All right, then back to the MERS 2016 COLA. As you remember, we chose, I think, 1% as the potential COLA for our retirees for 2016. We sent in for an evaluation of what that cost would be for the 1%. And Steve put together a memo for us. So Steve, you want to?
Sure. Got the valuation back from MERS, and the valuation came in at a cash requirement and a lump sum payment of $23,241 to give the 1% increase effective January through December of 2016 for the retirees. I know you guys, I think I missed the meeting where we had where the discussion took place of what to contribute, but it's less, I mean, it's very comparable in terms of what we're paying per like 0.1% increase compared to previous years. Does that make sense? Like in previous years, we had 1.7%. We gave, 35,000. So seems fair to me, and I would just recommend that you would approve the 23,241 for the 1% increase. And if you did, it would be on an upcoming council agenda for final approval.
And when we think about our budget, where does this come out of then? I mean, is this within what we have budgeted for?
It is where we have budgeted specific line item. I mean, it's not its own separate line item.
Right.
But it's under employee benefits and expenses, pensions and benefits.
Okay, but it's within what you already have
It is.
budgeted for the year, so it's not gonna mean a
Yes.
big change?
Correct.
Okay.
I would make a motion to adopt the flexible e-benefit option for retirees, increase of 1%, which calculates out to $23,241.
I'll support.
We have a motion and support. If there's no further discussion, all those in favor signify by saying aye.
Aye.
Opposed? Motion carries.
Well, I think I heard on the radio coming here that, I guess I forget which group it is, but they basically kept it flat, yeah. the Social
Military and
Security.
Social Security both.
Yep,
No cost of living increase,
so
so.
for the third time in the last 30
So
or
we're
40
doing better
years.
than the government, that's all we're saying.
Yep. Well, we had a lot of discussion on this last time, so.
We did.
We kind of know what we're doing, I think, at this point.
Yep. Okay, next informational items, performance data. Have the performance data for the month of September. September, again, was a good month from a sales standpoint. Our total electric sales were up over the previous month, and on a year-to-date basis, for those first 3 months of the year, the first quarter, were up over the previous year. So the number of residential customers stays about the same, and as do the commercial customers. Total kilowatt hours sold was up a little bit for commercial, down just a tad for residential. But all in all, it was a good month from a usage and sales standpoint. We had internal generation for the month. You can see that that shows up. We talked about that last month due to when it shows up in our reporting system. We generated 17,075 kilowatt hours. We have a comparison of residential customers previous month versus this month. You can see that that's up just a little bit. Commercial customers down just a little bit. Total electric requirements from July. See, there's a significant increase in July in what our total electric requirement was, and our peak demand was pretty much the same as it was a year ago in July. This was not the end of a quarter, so there's no new information on the billing stats. We flip the page and we look at our investments in cash, and again, we're doing well. We're back up in that 2 million plus category. That is where I think our minimum is in that area. That's up 300,000 over last year. Again, we had some expenses with both the turbines and the biodigester, and drew that down a little bit, but now it's back up to that minimum comfort level. The delinquents back down to 0 for the current of those that were collectible from active accounts. We still have a fair amount outstanding with inactive accounts, and our aging analysis is up for the month. That's primarily due to one customer that has an outstanding balance with us at this point. Anything else on the performance data?
Same balance we talked about before.
The capital expenses, there were some during the month. We had an addition of some capital expenses. We're still way under budget for the year. Again, this is only the end of the first quarter. Most of the dollars will be spent for the combustion turbine and some other potential projects as we go through the year. So we didn't anticipate a lot of capital expense during this first quarter, so we're doing well. The next page shows the individual projects where capital dollars are being spent. You can see this, so far we spent about $40,000 on the Rolls-Royce CT, some money on the upgrade for the East Sub, and finished up the biodigester project. So that's where that $129,000 in capital expenses have gone to so far this year. The income statement, as I mentioned before, it was a good month for total sales revenue. We were up over what was budgeted, and that put us in a very positive position for the 9 months or the 3 months year to date through September. We're about $60,000, $59,000 over budget in revenue. We go down through the other expenses. We see that we did have operating expenses for generation, and again, that was because we ran. We also had purchase power expenses that were above what we budgeted, and that's usually not what happens when we have a month that we have good sales, but We did have a higher than normal budgeted amount this month for purchase power expense. So we're over budget a little bit year-to-date for purchase power. As we go down through the rest of the expenses, to total operating expenses, we were over budget for the month, and that's primarily due to the purchase power. We also had some employee benefits that were over budget for the month, right, Steve?
Yeah, that's part of it. Mainly, we did have 3 payrolls, which I budgeted for. There was a lot of overtime. We had the Atwood transformer situation where we had the East substation. I think that was October. I'm thinking that September was the Atwood. And then we also had invoices come due for the line shack painting, and then the pavement of a road at Chatham, which was split between the generation and distribution. So there was just some oddball invoices that I just didn't figure were gonna come in at this time, so kind of got owned.
There goes your record.
And I was like, rats.
So the outcome of all that, even though we had a good revenue month, was that we had an operating income that was not what we had budgeted. It was only $10,000 instead of the 46 that we had budgeted. And that had an impact to our bottom line when we get to net income. We had budgeted a slight net income for the month, which ends up being a loss.
There goes that variance. Sorry, Steve.
So
We'll make it up.
we'll make it up. Just a little aberration for the month. Okay, outage summary. We had 4 outages in the month for a total of 148 customers out. If you look at the flip side, it shows that we had a blown fuse, tree took a fuse out, squirrel took a fuse out. So we had some busy squirrels in September.
Well, winter's coming.
That's right, winter's coming.
Yeah. Right.
Anything on the performance or other types of data there? All right, on to the manager's report. Again, this is, I handed it out this evening. It was not in your packet. I apologize for that. I didn't get it done in time to meet Sharon's deadline for delivery on Friday last week, so it's in the packet instead today, or handed it out today. Not much new at MMEA or MPPA this month at either of their meetings, other than the MMEA conference at the Crowne Plaza was excellent. The mayor was there. I think we had a couple of good speakers on the opening session of the second day. We had Sue Kelly from APPA, and we had Valerie Brader again, who was here in town, but had a little different talk. Same context in terms of what's happening in Michigan and the legislation and where the governor might be going with the items that he's looking for. But all in all, very positive, and lots of good information on what's happening in both Michigan and on the national front. We had a legislative luncheon in Lansing in the middle of September. Our goal was to meet and discuss those legislative items with our legislators, and unfortunately, neither of ours were there. So I didn't have the opportunity to talk to either Lisa or Dave.
That's all right.
Yeah. But I did have a chance to talk with a couple of other legislators, and some of them were key legislators in terms of what's happening with the energy legislation. And so it was good that I had that opportunity to spend time with other people who didn't have representatives from MMEA there, but were on either the committees or part of the subcommittees that are looking at that legislation. So it worked out fine. It was good. System generation and upgrade. The biodigester continues to improve its processes. They've installed some new equipment over the last 2 or 3 months, 2 or 3 weeks, I mean, and it's helping. They were able to run 24 hours for 3 days last week, and they still aren't at full capacity, but they at least ran for the length of time. They're now going to be able to increase the amount of feedstock that they're going to be putting in, because they have, as you remember when Greg Northrup was here, talked about all of the solids that kept getting in the feedstock and clogging things up. They've put in a new press that will be able to screen that out, and so they'll be able to push more fog into the system. They also have put in a separator tank at the fog system, so that they'll let the water settle out, and then they'll take the water off before they put the fog into the holding tank and then pump it into the system. So the dewatering of the fog and the being able to take out solids is going to help them get more of the BTU feedstock into the digester to increase the gas to be able to run the 24 hours. So they thought it was a good step in the right direction to be able to run for more than 8 or 12 hours at a time, and be able to run a full 24. They had enough gas being produced to do that. So
they ran 72 hours in a row then?
that's my understanding. Now, I'm not sure if they stopped for an hour or two in between, but they said that they ran 3 24-hour consecutive periods. So I'm not sure that they ran, I didn't interpret that they ran continuously for 72 hours, but that 3 days in a row,
Okay.
they at least ran 24 hours. So I
hope that means.
so
But I know what you mean, that maybe they had to, after 24 hours, they maybe stopped and checked something and then turned it back on or something.
right.
But they basically
or
ran-
had to wait for some more gas to build up or whatever. But they ran 3 consecutive 24-hour periods last week.
Okay. Is it still like half hour roughly that they're?
Yeah, they're running at 400 kilowatts.
Okay.
Right. So their next stage then is to start ramping up the number of kilowatt hours that they're producing during that time period.
Have we talked about doing a formal community ribbon cutting or anything? I mean, I know we talked about it a while ago.
We have, but it looks like now is probably going to be
Okay.
spring before we do that. Just give them the opportunity to make sure everything's doing what it's supposed to be doing. They're-
I have a question. If we're running at 100% for 24 hours,
We're only running at 50% for 24 hours.
okay,
Mhm.
all right. I misunderstood you.
No, that's right. Tom doesn't think we did that right.
I will verify, but
Yeah, that's what Greg Northrup told me yesterday, so. That's what I'm going off of. Work continues on the Rolls-Royce. Barney's been busy on that, and probably yet this winter we'll be ordering some additional equipment to be scheduled for spring delivery and get that up and running next summer as the target. We had a number of other items that happened during this month. As most of you know, who live on the east side, the changeover to the new system on the east side, the elimination of the east substation took place on the 3rd and went smoothly. And Tom and Mark and the gang were done in fairly quick time. Tom, it took you, what, a couple hours?
a couple hours.
Yeah.
Must have gone pretty quick, because my son was complaining that you were turning it off on a midnight on Saturday, I can't play video games.
We actually waited till
And-
2:30 because
Okay.
one of the bars
He
decided
never
to stay
complained
open.
about it, so I thought, Oh, I either went really fast or I was
It wasn't out
sleeping,
that
so I
long.
didn't notice.
No, it wasn't.
You may have been working a while, but it wasn't out very long.
Yeah.
I don't think the outage,
Half
the
hour?
actual outage was a half hour, 45 minutes. That's it.
Okay.
There was a lot of prep work involved to do it, but, and then we sat and waited
Full
for the bar to
third shift drive.
close.
Right. My understanding is some of the businesses weren't quite ready and were concerned, so it was great that our staff gave them the courtesy of pushing it. They were getting prepared and gave them some more time so they could finish up closing the bar down
Yeah,
and
bars
things.
are open at that
You don't
time,
get that
right?
with consumers, you do in Lowell, so.
Yeah, but I think we were scheduled for 12, and they were
Yeah.
here then or a little earlier than that, and waited till about 2:30, and then
Okay.
pulled the plug at 2:30, and it was out for half an hour, 40
That's good.
minutes.
Yeah.
Back on, so, good job, thank you. We're also, should have our portion, or the major portion of the work done at the Baptist Church this week, and the next week Kent Power will be in to do the larger distribution lines, the Hendricks, and we're going to assist them as much as we can, and hopefully that'll be done by the end of next week as well. So those two big projects will be out of the way and under our belt by probably the end of next week. Nothing new to report on the next 2 or 3 items there. In terms of natural gas supply, I'm still waiting for a meeting to be scheduled with consumers. We are looking at what our options are to get some information out first of the year with regard to the mural painting on the back of the line shack. And I haven't heard from the consultant at the schools for about a month now. So I will touch base with them and see what's going on in the next couple of weeks. Let's see, Lowline Power Building, okay, we have received, oh, that's not what I intended to write, so.
It kind of confused me. I wasn't sure.
Yeah, no, that's, that was evidently a carryover from previous month. We had some work done on the inside of the building for those cracks in the building. We had them sealed on the outside when it was painted, but then we had some constructive type work done on the inside with cement and to try and hold those together for a longer period of time and minimize the cracking that will go on from here. So that's a leftover from a previous month. Sorry about that. I didn't cut and paste so well today. The pilot, we're still working on language. I am having a conversation with Dick Wend on what would be the easiest way to do that with regard to, again, a change that would just indicate that if there was, for some reason, a situation arise where we needed to look at the amount in a given year that we contributed in pilot, that there'd be a mechanism to do that.
For the viewers, would you just, sometimes, what is pilot?
Pilot is payment in lieu of taxes. So
Thank you.
we make a payment to the city every month that is 4.5% of the total revenue that we bring in. And that's because we don't pay taxes as a non-taxable entity. As a department of the city, we contribute to the city general funds through a payment in lieu of tax called pilot.
Thank you.
All right, H, financial and operating ratios. Steve gave some information on that last month. That we had talked about some key statistics that come out in the APPA statistics guide every year, and we'd waited till the audit was over to do that. But another thing that happened recently at the MMEA conference was Dawn Lund from Utility Financial Solutions gave several breakout sessions for board members that talked about different financial aspects of a utility. Andrew happened to be there for one of them in particular that talked about some of the key ratios with respect to monitoring the financial health of a utility and how that might apply or have an impact on rate analysis. And so we just thought, because of that and the fact that you were there and got that information, Steve put together some of those numbers, and we'll show you where we are with respect to what they recommend for most utilities. So.
Yes, it was a great session that Dawn had. I'd like to preface, I contacted Mark Beauchamp from Utility Financial Solutions, and he is going to give us a quote for a rates, cost of service study. He recommends that we do one every 3 to 5 years. We're on the tail end of the 5 years. Even though we might be meeting a lot of the targets that I'm going to go over, they still suggest to have a cost of service study done because our PCA, is over 2 cents. It's always good to see if there's cross subsidization going on. I don't know if I'm saying that right. Like if the residential class is subsidizing the commercial class, and the cost of power and our load has changed, and they talk about putting more of your cost in maybe a customer charge or a variable charge. So a lot of the things I'm going to go over, I have really good news, but that doesn't mean we shouldn't just avoid having a cost of service study done. There were 3 really key targets that they look for in utilities. The first was days cash on hand, and they recommend that a utility should have between 90 and 180 days cash on hand. And I made that calculation using our audit. If I use all cash, including the restricted cash, which is some of our investments for our bond, covenant, and customer deposits, we're at 125 days cash on hand. If I do not take that into calculation, we're at 95 days. So we are within the measure that they suggest. They do suggest that utilities adopt a formal cash reserve policy. So as board members or management changes, there's a rationale and people understand why, hey, we need cash, and it can be clear to the public. So they say, oh, you have all this cash in the bank. Well, this is why. And they have different things breaking that down that we can go over in the future, maybe at strategic planning, I think in future months.
We have the charter that sets a minimum and a maximum of 10%, a minimum of 10% and a maximum of 20% of our net value of the system. So that's what we've kept our eye on. And it does correspond pretty much to the level that we're at, but Utility Financial Solutions has a formula that they use for deriving what your cash reserves should be, and recommend that we have it in a policy that makes sense, other than just a flat number that somebody has picked or a percentage. So we'll take a look at that, like Steve said, in strategic planning, and if we want to adopt a specific policy that goes beyond what the charter requests, then that's something we can look at that time.
And what you're saying is that the policy is the formula is the policy as opposed to a number.
Yes.
So instead of saying you should have X% or a X value,
Right.
that there's this formula that says, hey, this is what your cash on hand should be, so that it's gonna, you don't have to keep looking at it every few years because you're out of date kind of thing.
Right.
The second target they had was called a debt coverage ratio, and that's your ability through your normal operations to pay current debt. And they recommend a ratio between 1.2 and 1.4, and that's what our bond covenant says we need to keep. For this past fiscal year, our ratio was 2.15. So we were very healthy in that respect. They have a target rate of return. Even though we are not-for-profit, they still recommend that you do have a rate of return, so you're investing money in your system so it doesn't age and get old and obsolete. And for years, we were underfunding it. This past year, we were right around 10%, and that's basically derived by taking our operating income divided by the net book value of our system. They recommend a minimum of 4 to 6%, so we were over the minimum this past year. A few other things that they like to look at, the reinvestment in capital was done through operating revenue and operating income, and that was done by Lowell Light and Power this past fiscal year. They like to see if the age of the system. They like to see if the age of the system is less than 65% depreciated. If it is, you're in good shape. Ours was 59.55% this past year. And then the last item they look at, they like to see that the depreciation number that we see on our audit, we're investing at least that much back into the system. The depreciation on our audit was roughly $530,000. We invested over $900,000 back into the system. So based on the targets that we heard, we're doing a really good job in my perspective, but I still think a cost of service study would be prudent and something that Greg and